The pharma sector saw a growth of around 8% in the financial year 2024, which was at the lower end of the 8 to 12% guidance provided by management of most companies in this sector. However, what are the estimates for the growth of the pharma sector in the current financial year? What are the risks for this sector? How did the companies perform in FY24, and now what strategy should be adopted for the pharma sector? Let's understand in this video. According to the rating agency ICRA, the revenue growth of 25 major domestic pharma companies could be 8 to 10% in FY25. These companies contribute 60% to the total revenue of the pharma industry. In FY24, the revenue growth of these companies was 13 to 14%. ICRA believes that due to the higher base, revenue growth in the US and Europe is expected to decline to 8 to 10% and 7 to 9% respectively. Year-on-year, an overall growth of 18 to 20% and 16 to 18% is expected in these two markets, respectively in emerging markets. Year-on-year growth of 8 to 10% is possible in FY25 as compared to 16 to 18% in the previous year, while growth in the domestic market may remain stable at 6 to 8%. However, India Ratings believes that due to the surge in demand, the growth of the pharma sector in this financial year will be 8 to 9%, which is better than the previous year. Out of this 8 to 9% growth, 4 to 5% will come from price hikes, additional sales in new field force added last year, and higher growth in chronic therapies. In FY25, there is a possibility of a sharp increase in inspections by the US drug regulator US FDA. However, due to the decline in revenue from one-off products, sales in the US may either remain stagnant or grow by around 5%. According to India Ratings, the operating margins of companies will remain strong because the decline in prices in the US generic business has stabilized. High-value products are being launched in the market, and companies' costs have decreased. Recent M&A activity, that is mergers and acquisitions, has been observed in the domestic formulation segment, which may continue. However, the most bullish view is held by the brokerage house Sharekhan, which believes that in FY25, the sector's revenue growth will be 11% year-on-year. The sector's revenue will increase to 60,202 crore rupees. EBITDA, operating profit, will grow by 24% to 14,971 crore rupees, and profit will increase by 43% to 9,174 crore rupees. So, one thing is clear, that FY25 will be a strong year in terms of growth for the pharma sector. But are there any risks or challenges for this sector? Well, according to the rating agency ICRA, there are currently two major risks for the pharma industry. What are those? First, there has been an increase in warning letters and import alerts issued by the US drug regulator US FDA to Indian pharmaceutical companies over the past year. This has led to delays in product launches, penalties due to supply failures, costs related to remedial measures such as appointing consultants and utilizing additional management bandwidth, impacting the profit margins of companies. Although the impact of the Red Sea crisis on pharma companies has not been felt yet, but the adverse effects of supply chain disruptions or increased logistics costs are important to watch out for. Now let's look at how pharma stocks performed in FY24. When we look at the one-year return, all the major players are in positive territory. However, on one-month basis, Dr. Reddy's, Sun Pharma, Cipla and Lupin appear to be weaker performers. In mid-cap space, Alembic Pharma has disappointed investors in the short term. Aside from that, the performance of other mid-cap pharma stocks has been good across different periods. The performance of healthcare or hospital stocks has been even better than pharma stocks. Except for Apollo Hospitals, all of the stocks have provided good returns. The poor short-term performance of Aster DM Healthcare stock is solely due to the adjustment for a special dividend of 118 rupees. Now, the most important question: what strategy should be adopted for pharma sector stocks? Speaking of the top picks from the brokerage house Sharekhan, among the major players, they include Sun Pharma, Dr. Reddy's and Cipla. The mid-cap space, they have included Sanofi India, Strides Pharma, Kaplan Point, and in hospital stocks, Artem's Medicare. And according to stock market expert Santosh Singh, among the major pharma companies, GSK Pharma can be bought with a 40% upside potential. In hospital stocks, KIMS, Narayan, Hrudalia, Medanta and Fortis Healthcare are good but should be bought on a 10 to 15% decline. Additionally, for API manufacturing companies like Divi's Labs, Laurus Labs and IOL Chemical, investments can be made for the medium to long term with a 30 to 35% upside potential. Overall, pharma stocks have delivered tremendous returns in the last 6 to 12 months. Although the growth prospects ahead are good, considering the high valuations and risks, it would be prudent to invest in selected stocks of this sector with a long-term perspective.